All right, guys, welcome back to the channel. Well, it's back, and I'm talking about the stock markets and, of course, BTC. Doesn't mean that things are going to be easy. I suspect they're not going to be easy. Of course, you could argue when and were they easy. And I would suggest that the lows in the market, the significant lows back in 22, 23, are the much easier points in the game. But of course, that's history. What can we do from this point forward, considering the data that we have, considering what's going on in the charts right now? I'll give you an update in today's video, so make sure you hit the like button, subscribe to the channel. It's your home of macro cycle analysis. We're going to cover Bitcoin, cryptos, the stock markets, and of course the real estate cycle. But I'm going to cover a little bit more on altcoins in today's video. Obviously, we've seen a bit of excitement over the last few days, especially with Ethereum. And then, of course, the narrative that if Ethereum goes, the altcoins are going to cover. How about I throw a little bit of, terror onto that? But I'll leave that till the end of the video. Good things are happening. BTC, 14% from the old all-time high. In terms of a technical position, closing above the 50% level is a good thing. I've got a little bit of sentiment to get into as well. Obviously, we need to take into account both sides of the argument here. 92,000 was the first, a significant key level to get above. Reason being, it was obviously the major 50%. It was a swing low. It was previous support, previous resistance, so on and so forth. Big level. So far, 3 days, right? 95 is the next level. We've done our overbalance in time and price, and then we still needed 2 more signals to line up for this indicator to give it even more strength. That being the 50% level. We got it. The next is a significant swing top. We have the first one here. I would really like to see this one, the $95,000 top, because that's where the market started to really give up on what was going on here. And then, of course, Trump brings out the tariffs, and the rest is history. So we're very close to that point. I suspect even if it is rejected here because of the low volume that is in the game that at the moment, obviously we've seen a lot of people leave the market. We're not necessarily seeing the same sort of volumes come back in the daily exchange volume yet. And so if we do see a correction at this point, that would only be natural. And that would be another good entry opportunity. It would be a good opportunity for the market to hold its ground and to consolidate before that next move up. In the meantime, we keep following the trend. There is a very minor swing low in at this point. And so there's a much higher degree of a chance of, a test and then a fail. So the thing to look out for next, should Bitcoin break through 95,000, get close to these next swing tops at about 99,000. Of course, that then brings on the $100,000 level, being that psychological level. If we start to see some sort of final pumps to the upside and then lower closes, that would be a pretty strong indication that we're going to see a correction. It doesn't mean that the game is over. It doesn't mean that this was an absolute failed attempt and it must break through $74,000 or $75,000 low. It's just if we see this final or a day up that breaks these tops and then a low close, and that's the key there, the low close, that would mean that there is some weakness beginning to form in this up move. Of course, up moves have to have corrections. And so that close, we've seen it happen before. Look at the inauguration day. This one here, this is Trump getting in, big pump up. It broke the previous all-time high top. It was on significant volume, so there was quite a bit of participation in the game. You can see that volume there coming into the Coinbase and across the rest of the exchanges. It was pretty high volume, basically around the globe. The highest volume that you'd seen since, Trump getting elected, and then those next few days after it. But the key signal there is the close. And if you prefer your candles, you can look at that bar. There's your spinning top, doji top, whatever you want to call it. That is a very, very weak signal. It doesn't mean that the next day is going to collapse, as you can see here over the coming week or two. It just means that it's probably very unlikely that you're going to see the prices break through to new fresh highs. And then eventually, the market rolled over from that point. So that's where we currently find ourselves with BTC. It is back, but it's not without the difficulties and the uncertainty through the rest of the markets. And I'm going to get to that with the stock markets. But first, let's have a look at the sentiment for BTC and cryptos. Fear and Greed Index is now sitting at greed. So I think that's a pretty interesting read, considering that today's close was slightly higher than yesterday's close. that we haven't seen a strong push through. Of course, we are at resistance levels, but in terms of the market sentiment, the day that we got the big pump up gave us a reading of 72, and then over the last couple of days, it's faded 60 and then 63 and then 60. So the sentiment is fading even though the market's climbing higher at a slower rate. The volume has also dropped off a little since that big breakout bar on the 22nd. So, in terms of the short term, maybe some momentum is slowing here. Ideally, that would be the case. And then we move into a corrective wave before we can carry on. There's a bit more of a consolidation. And so we're also seeing that with the search terms. Crypto Bitcoin had a rise up for BTC. So the search volume had picked up. Now it started to drop off again. So again, the retail gets interested towards those moves up. Then they start to fade again as the moves don't really go anywhere. Everyone starts to pile in like we saw with the ETF flows over the last couple of days. Michael covered that on his channel in further detail. But essentially, we've seen some of the highest ETF inflows in the last couple of days. And they basically were very similar to those inflows around the peaks in January. So another thing to consider when we know from that tool, the ETF flows has been a very, very good indicator to fade, essentially meaning do the opposite to what the ETF, whoever's buying those ETFs, do the opposite to those people. Those people had been selling quite heavily around the lows, basically for weeks on end, were selling day after day. And then, of course, the price is now up 20-odd%. Okay, so that leads us to the USDT dominance. We've got some support here, of course, at 50%. What else could have happened? 50%, 5% of the USDT dominance is where it sits. Ideally, a breakdown of this level would then send us to roughly around 4.7 to 4.8. You'd start to see more money flow back into Bitcoin and cryptos. Breakdowns of 4.75. Obviously, we look further down, and that's even better for the bull market. The warning I had on this recently is that even though this thing can go down, that's a good thing. Well, at least if you're looking to the long side of the markets, you don't really want to be shorting too heavily if this is dropping, because it's not going to be great for anyone that's trying to short. Money's coming back in, meaning things are going up. But the warning signs here are to watch for the diagonals. We have the diagonal here at around 4.5, depending on when it gets there, it could be 4.55, 4.6, and then the lows at around 3.8 to 3.7%. And that warning goes all the way back to 2021. It was essentially the same playbook that we saw. A bottom formed, we saw a break up, so a lot of money flowed back into the stable coins, and then it stayed around those tops, got rejected at 50% and previous resistance levels. Same sort of thing that happened this time. Previous resistance levels just short of a major 50% as well. And then it had another attempt to break that diagonal. It was not able to do it. And of course, well, then all the money flowed all the way back into stable coins at a much faster rate, but more so for a longer time. And that's basically where you get that significant bear market for Bitcoin and crypto. It's obviously a bull market for stable coins. So that's going to be the very interesting one now to watch over the coming months for Bitcoin and cryptos. The stock markets are also back to a degree. Fear is at 31, yesterday 27, and it's finally climbed out of extreme fear, which it had been sitting in for about a month. So this could also be working in favor of Bitcoin. I'm short of saying it's going to help for altcoins yet. I think that's still got a little bit more time to go. We haven't seen a significant base forming there for alts, but I'll get to that in a moment. At least the sentiment is starting to stabilize here with the amount of volatility that's come through in the stock markets over the last couple of months. We've also seen the Zweig breadth thrust. You may have heard about these a few times. You're getting a thrust between the stocks going from so many at lows, then bursting up to a lot at highs. So you're getting these breadth thrusts, and they're typically reasonable signals here. You can see on the dotted lines where you get these signals and then the prices have eventually gone up. So that would be a good sign that investors are, coming back to the markets, money coming back in, and the uncertainty is slowly beginning to fade. Now, in terms of the data, when these signals have come up, going back to 1950, you've got, a number of them here. 100% of the time, 6 months later, 3 weeks later, 1 year later, from this signal, the market has been up. The S&P 500 has been up. So 74, 75 years, pretty good record. And even when you look at the 1 weeks, the 2 weeks, the 1 month, the 2 month, 3 month, it's still much, much better than a coin toss. It's about 80%. So there is a pretty strong potential that there's further upside in the market, which is what we've been talking about with the real estate cycle, the 18 to 20 year real estate cycle. We didn't see a land-led recession into this tariff war low. So real estate prices are still holding up. I know some people are going to have their own opinions based on their particular suburb in some bum F of nowhere, that their town might be going down, or their suburb, or maybe even one of their cities. But on a national basis, US national home prices are not going down. That's just from what the data is saying. So it's not going down yet. Eventually, things have got to correct, but that's not the time. Stock markets are still looking relatively, healthy for the upside, and I think that's going to be good signs for BTC and, of course, cryptocurrencies at some point, depending on which ones. But back to S&P, we've got the VIX as well. So we've seen the breadth thrust, we've got the volatility index. This signal, there's not too many there to have a look at, only going back to 87. So on each of these occasions, you've had very, very significant swings with the volatility. And from that volatility spike, generally you get higher prices. The only one here out of the so far 3 signals was the global financial crisis, which went lower into March, but then bounced out of that. So if you could stomach this low into the low of S&P 500, well, then you've got some pretty significant upsides to be had. Just looking at the data itself, 100% of the time, 12 months later. So if this were to occur, 12 months later, it was in the positive. So it's a decent amount of time you got to hold on. There's 2008 when the signal came up. 12 months later, it was up 8%, and the other 2 occasions, 18. And of course, we know what happened after COVID. It was 46% up. So again, volatility has been doing what volatility does, and increasing towards the end of the cycle as well. Now, the stock market I'm saying it's back in that sense because we got a close above the previous swing top, a close above the 50% level, and the highest close since Trump manipulated the market on Tuesday, Wednesday, 9th of April. Remember when he said, now's the best time to buy, and then 3 hours later tweeted about the tariffs? That was this massive bar here, that 10% day. And so now the market has gone above that, and on a daily close, it is above those levels. It's also above the swing low, which was the support level before the market broke down. So there's some pretty strong signs here. However, that doesn't mean it's going to be easy, as I keep coming back to the title of the video, because it doesn't mean it goes straight up. Of course, anything's possible. I have to put that in here every time. It could go straight up, but I'm still in the view that we're going to see a bit more of a messy 2025 until we get towards the end of the year, where things should go a little bit cleaner. But in the meantime, this one here, I'm looking at a 20-year cycle. So this is 2005. This is what 2005 looked like. You had a pretty significant dump into April. We got that. Then the market came out of April. There's still corrections along the way, but this ran into June. So from this point, it could run up with corrections along the way into June. And then there was a significant correction in June, another move up through July, and then August had another significant correction, and October had another significant correction. They're the things I'm paying attention to now. Basically, every 2 months from there, you got April, you got June, August, October. It's not I don't think that's an easy period to trade when you're basically coming out of some very significant volatility. Market rises, another correction, rises, correction, maybe a little bit of a weaker rally here, and then a more significant correction. And then the end of the year, things might get a little bit clearer. And that should do enough damage to the market, or at least investors, to sort of piss off. And then the move begins again after we've seen many, many years of pretty clear upside besides 2022 and that spike in 2020. It's basically all been gains all the way up, 2023, 2024, 2020, 2021, so on and so forth. You get the idea. So that's what I'm looking at here. We've got our 20-year cycle, and we can chuck on our 10 years and mix those together as a composite. Same sort of thing, 2015, big correction into April, correction into June, massive dump into August. You had September in this case, October, which was bigger in 2005, and then of course a bit of a cleaner run towards Q4. And gold is also giving some signals here that the uncertainty might be cooling off at this point. We've seen some of the largest corrections on gold after the masses, the retail hype leading into the $3,500 an ounce top came in. Big volume days as we've seen significant corrections out of gold. So, you know, some people might be a gold bug, but this is actually a reasonably good sign. Should this continue on, of course, that the, people are coming back to the risk on environment, maybe pulling some of the profits out here after the market's just basically run up for nearly 20% over a matter of days. And so then you're starting to see some of this money come back into the space. Good things I see for Bitcoin, at least over the coming few months. And these corrections can go on for a bit of time. I've talked at length about 2006. This correction here was 25% from that high at $730 down to the low at $540. And that went on for about 490 days before the breakout that occurred for gold at the peak of the S&P 500. So the S&P 500 got to a peak in October 2007. And then from there, gold broke out. The rest is history from there. So let's move on to altcoins. Others USD found a new low last week actually, hitting 7.6%. So it's still not there yet where we would see a lot of these altcoins start to really take off, which is why I still think it's a perfect place for a trader's market as opposed to the old days where you could just buy and hope and wait for a few months until your coin's at 10, 20, 100x and then get out. So the altcoins are sitting at a significant level here. You've got the previous low going back to June of 2023, but still no signs of a significant move to the upside. It definitely needs to break somewhere around 9%. You can see the previous support, the previous swing tops, even going back to 2003. So unless we get any sort of signs that, at least the altcoins are going to break past that level, any of the moves to the upside would likely be quite subdued. So it's really coming down to a trader's market. If you've got a plan to trade, you're going to do pretty well. If you're sort of sitting on the sidelines, hoping for those 50Xs, it's probably going to be more difficult, as you've seen over the last 12, 24 months through this cycle. It's really been about trading those swings. Speaking of which, ETH has basically had no swings this entire time. ETHBTC, that is, to the upside. It's been basically buy and hold Bitcoin and not Ethereum. Basically be heavier Bitcoin than Ethereum. And the typical narrative around the markets is that, ETH has got to go up. Something has to happen to ETH for altcoins to have a good day. And really nothing has happened to ETH for a very, very long time. Even these last few days, I saw a lot of excitement come into the game for Ethereum, and it's just faded again. You had an outside day, an up day, and then a down day. And this is ETH versus BTC. So it needs to get on to at least break back past some of the swing tops that it's put in over the last several months. First levels are looking for at around 2.4%. So that's 0.024. That's going all the way back to this Feb low, these tops. It's got to do something to get back past those previous levels that were support and now resistance on the way down. Apart from that, I think it's going to be more of the same here for Ethereum. Total 3. Now, this is where I said I would maybe break the hearts later, years and years away from here. So if you made it this far, thank you very much. Hit the like button, subscribe to the channel. Check out TIA Premium with Michael and I. This is for trading and investing portfolios. If you're serious about your trading and investing, this is for the stock markets, real estate cycles, and of course, Bitcoin as well. We have hours and hours of structured courses on how to put together your plan for your long-term portfolios. This is not just about the short game when it comes to altcoins. This is encapsulating everything. Where you're going to put those gains afterwards from altcoins, from your stock portfolio, maybe into real estate, so on and so forth. That's what this is about. So we're seeing some early signs that the stock markets are holding ground, closing above key support levels. Bitcoin, of course, has been closing above 92,000 for the last few days. So although if there is some sort of corrective move after this run up, it still seems like we're on the well, the bullish side of what's to come next in this cycle. Now, I said I would have something on altcoins and a longer term outlook for altcoins. This is going out years from this point, but it turned into a bit of a rant. So I'm going to leave that to a future video, which I'll dedicate further towards Bitcoin and altcoins. And yeah, I guess if you do want to see that, let me know. Hit the like button, subscribe, and note the pinned comment down below. Let me know you want to see the rant on an altcoin cycle. See you guys at the next video. Have a fantastic weekend. Peace out.